Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by these great sponsors. Axon started out of a passion for keeping agriculture moving. Imagine having 100 years of tire and wheel knowledge in your back pocket the next time you sell a piece of ag equipment. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Hey, what's rule number one? What's rule number one? Party. No, not party. No, it's not party.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving
Hello and welcome to Moving Iron Podcast. Mark and Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to give the loyal listeners of the Moving Iron Podcast a free digital tire pressure gauge and a Firestone t-shirt. So if you're looking for something to check your tire pressure and keep your shirt on at the beach, go to marketing@axontire.com and they will send you one. Just give them your details, tell them Moving Iron Podcast sent you, and they'll send that over to you. So just go to marketing@axontire.com for that free tire pressure gauge and Firestone t-shirt. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how, well, it's like some foreign language there for a second, Shawn. No matter how you buy Celtic, could be Celtic because you're in Ireland, right? So no matter how you buy ag equipment from a dealer, an auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Shawn is with Hackett Financial from Boca Raton, Florida, and he's kind enough to come on from a couple times a week to talk about what's going on. And this week he is in sunny, warm, tropical Ireland right now. So Shawn, how you doing, bud?
Yeah, from Northern Ireland and Belfast. I'm only the Ducks are happy right now.
Yeah, it's this time of the year. I think we're in the same latitudinal degree here with Nebraska, so it's a lot of the same weather. We don't have the humidity that you're going with, the dampness that you have there, the humidity in the air that keeps it extra cold. But so far, what's your take on Ireland so far?
It's a beautiful island. The people are super nice. I've never seen so many bars per square foot in my entire life. And yeah.
That's the only place. That's one of those places I want to go, man. Just for that, take myself a pint.
That's a beautiful country, but for me, I just a little raw and cold and clammy for me, but not a bad place to visit.
So you're saying it's not the warm tropical humidity that you're used to in Florida, is what you're saying.
Vitamin D production here is in great deficit. So.
Right on. All right, Shawn, plenty of stuff going on in the markets. Take a look what's going around. We had some stuff hit yesterday that it looks like this profit taking might have taken over a little bit further into what we saw at the end of last week, carried over and into Monday's markets. We saw a few things that ended down for the day. Nothing crazy. There wasn't any big ones. Soybeans, it seems like soybeans has a huge swing no matter what they're doing. Either they're all the way up or all the way down. There's nothing really in between. But when you look at things like oil, for example, yesterday closed down, West Texas closed down $4. Brent crude was down $4.44. A lot of volatility in the oil market right now. With that thought process, when you look at oil, what do you think that driving factor is right now? That's showing that huge intraday volatility that we're talking about.
Well, I mean, Russia's Russia. Nothing's changed, and
Right.
everyone's worried about that supply, not a supply. What's going to happen with all that? And that's what got the market really rocking and rolling. Really got that spike trade going. But then, the Biden administration said they're going to release a bunch of oil, which they've been doing, but everyone realizes that's not a really real material reason to be bearish crude oil other than very, very short term, right? Because the more you deplete the inventories, you still have to somehow find enough production when you're done selling, right? The biggest issue I see, Casey, is that China keeps locking down their country because of this zero tolerance policy. In fact, I saw this graphic yesterday that says of an analysis of China's top 100 cities by GDP finds that all but 13 of them have imposed some form of extreme quarantine restrictions, and that intensity is increasing day by day. So that's not good for demand if it continues. It's not good for demand. Obviously, Shanghai, for example, everyone's locked in to their either office building, or in their home, and they're not allowed out. And they're ordering things in the morning, and it's a ration. You're only allowed a certain amount of food you can order, and then they apparently give it to you later in the day. I mean, that's what's going on right now, and that is concerning on the demand side if it were to continue. Just think what happened when we did the same thing here. We locked the whole country down, how devastating it was. Well, they're now actually going through that because of their zero tolerance policy, and because it appears that they've been they had such an aversion of using or allowing people to get exposed that now they're all getting exposed, and the rest of the world's all gotten sort of this herd immunity built in. It seems like they're like a year behind where everybody else is, because they prevented everyone from being exposed to these viruses when they were coming along. So it's a mess. I don't know how long it's going to last, but I think crude oil specifically, if no one's driving, if no one is operating, if production plants are at half throttle, that can't be good for energy demand. That's all I just have to assume that's what's going on in crude oil on a day-to-day basis, is how long is this going to go on? So,
Yep. All right, so let's jump over and look at crop planting progress reports as to what we've got going on there. And right now we're very early in the season. Obviously, it's not like it's very far into that. Most places won't actually start planting until about the April 15th time frame on into the first part of May out here. We start planting corn 1st of May. Sugar beets go in the ground about the 15th of April. So we'll see what happens there. But right now, if you're looking at a crop progress report, it looks like Texas is about 54% done. Kansas has got 2% in the ground. Kentucky's got 1%, and North Carolina's got 3%. The rest of the states haven't registered yet. And then you jump over and look at soybeans, and not a lot of soybeans. Soybeans haven't planted anywhere yet. Cotton acres, jump down and take a look at that. We look about 4% of cotton's been planted, and the average right now is like 6%. So, whatever. I guess as you're looking at that stuff right now, you've talked about this when you're looking at going into this season where you're going to see some weather delays because of switching from La Nina to El Nino, and you've got more moisture capability in there, and that late spring rains going into early summer during that key planting cycle. What do you think the reaction? How long will the reaction have to be before the market really takes a hard look at what's going on as far as planting progress goes?
Remember, there's the time frame that we would like to get the corn crop planted, for example, and then there's when we need to get the corn crop planted, as you said.
Right.
We would love to turn wheels in the first week of April and really rock and roll in the second week of April and get a head start and get crop in the ground early, especially for corn. We would love to be able to do that. And many years we are able to do that. We were able to do that, last year, and that's definitely not going to be happening this year. Weather is too cold. too much moisture in the center to center east grain belt. And now we're looking at getting a major late winter storm in the northern plains, where they're looking at 12 to 16 inches of snow. And once again, continued cold weather through the end of the month. And that's just going to we're going to have an early start to the planting season off the table. That doesn't mean you hit the panic button yet, but the question you're asking is, when would the market really start to worry? I think if we got to the third week of April and it looks like we're not really going to be turning a wheel in the mid-May, the market's going to start to get really nervous, especially as worried as they are about corn right now. Just everything is just micromanaging everything. I don't think if the planting season is delayed into, let's say, the lion's share of it is delayed into mid-May, I do not think that the corn market will take kindly to that. I think they would react. And I think the weather forecast in, let's say, the end of the third quarter of April would give the market the signal that, we're now not even looking at a late normal beginning. We're just looking at a late start. And the market will then begin to dial down what those yield expectations could be. Now, of course, what's bad for corn is good for soybeans. We would be thinking about even more soybean acres than, So anyway, I would say that in terms of things like spring wheat that's planted in northern plains or corn, I really think that give it 2 more weeks, Casey, and it still looks as dire as it does now, which we believe it will. The market's going to have to start to react to that. And that's why we continue to feel, especially for the corn market, we've been talking about this potential for a blow off top in, late spring, early summer. And it looks to me like we're set up for it. We continue to see, even down in the second crop corn in Brazil, that had good moisture leading into the planting season, got the crop planted in good shape, had a good start. We're now looking at a pattern that's starting to get pretty dry, and pollination, the core pollination is right now into the first half of May. And so, I think once again, it doesn't look like it's going to be super hot like it was last year, but just to have drier than normal weather during pollination means you're probably going to take the top end potential off of the second crop corn in Brazil, and the market's banking on that being saving the day. And if it just comes off a little, the corn market has no wiggle room right now. I mean, if you believe in the acreage number that the USDA came out and said that's going to be the number, I'm not saying that is or it isn't, but if you do, there's just no room for anything but perfection right now. And so I still feel, as high as corn prices are, that we still have, potentially one more reaction to the upside to factor all this stuff. Because if you really think about it, Casey, mid-late May, we're going to know what's happened with second crop corn in Brazil. We're going to have a really good idea of exactly what the nature of the planting season is going to be. We're going to have a pretty good idea of whether Russia is getting the corn crop planted or not. So the market runs up on worry, on fear of the unknown. And whatever the answer is to those 3 things I just mentioned, whatever it is, you're going to get clarity. You're going to know, well, Russia planted half the corn crop. You're going to get answers to your questions. It's hard to get emotionally excited about a market when you put facts to the case. Buy the rumor, sell the news is what that's based upon. So I feel we can run these markets up, or this corn market up, into that mid-May, late May timeframe. And then as we factually start to get answers to these things, it'll be pretty hard to hold the market higher from that point going forward. So I'm kind of thinking we're in this final phase higher for corn. At least it looks like to me like, wheat already had it on Russia. Soybeans already had it on Brazilian drought. Now corn's going to get it on chaotic planting season. So
when corn takes off, and you're already seeing some high numbers out there anyway. So, obviously corn's going to start dragging things up to the top right along with it. So, are you talking like when corn shoots up, that soybeans and everything else is going to fall right along with it?
Well, I think they'll follow. I don't think soybeans will make new highs from the high they made if there was a spike trade they made on the Brazilian drought peak. I don't believe soybeans will take that out. We had that spike trade on winter wheat, 13 change, whatever it was exactly. I don't believe we'll take that out. I believe we'll drag those markets higher. And I think that, but I don't think that, I think those, I'm kind of in the idea that we have these rolling blow off tops in grains, where we said we had soybeans, then wheat, and now corn's going to finish the job. Now, when wheat made a blow off top, corn didn't make a blow off top. It was being dragged along with the wheat. Now corn's going to be the leader. So I think corn's the one I'm anticipating making, really taking new ground here to the upside. The other markets, more of a, working your way back, a retest of the highs, some kind of a failed secondary high kind of a thing. That's what we're envisioning right now, looking at everything we see right now. So
okay. Right on. All right. So you take a look at this blizzard that's coming through North and South Dakota, mostly North Dakota, but it's right. I mean, there's a lot of calving going on right now and those kind of things. So I guess as you take a look at that, what kind of impact do you think that's going to have in the overall cattle market?
It's going to be pretty significant. We're getting this cold, it's not just a cold, but it's when it's snowy and wet, and it's just the worst time to have this kind of a late season storm. And it's really going to impact, the production potential of calving in the cattle market significantly. And it's going to further reduce the animal feeding units for cattle as we get later in the year, when when the animals are going to be extremely, extremely tight. It looks to me like this final move higher up in corn, and this fear over the economy, Casey, on these backing up of interest rates and this lingering Western U.S. drought, which is the final, is causing the reason for this final herd liquidation event. We've been herd liquidating cattle since 2019. This is not like this just began yesterday,
right?
But there's usually the final puke of the final animals that can go. I mean, you're not going to liquidate the herd to zero. At some point, you say, we've liquidated everything we can. I think this is the last phase of it, and we've been seeing some pressure in cattle because of it. But once this phase is over, and we think it will be more largely over by late spring. I mean, we think that the availability of animals going forward from that, after that's over, it's going to be really, really sparse. And as bearish as it's been for the cattle market in the last month, it's going to be a springboard later in the year. And so, keep an eye on the cattle market later in the year. It could do what hogs just did, a month and a half ago, when it went straight up after a period of quiet. So, definitely believe that this late season winter storm, something we talked about too, is going to actually increase the bullish outcome later in the season, although it's going to cause some pressure right now.
Gotcha.
So,
okay. All right. There's been plenty of talk right now. If you take a look at the news, and especially since the Fed announced that they were going to start raising rates, there's been lots of talk about recession and those kind of things started popping up into mix. So if you take a look at energy costs are high, food costs are high, you have inflation, all the contributing factors to a recession are there, right? What are your thoughts on how, going through the rest of 22 into 23 economically, do you see a recession coming our way, or do you think this is something that when manufacturing bounces back and inflation slowly starts to ease, that there's some of this tension is relieved?
Looking at how much interest rates have backed up, forget what the Federal Reserve is doing. The Federal Reserve is always behind the curve anyway. They're just following the market. The Treasury market's interest rates have gone through the roof. And the one thing I think that's kept the economy going, at least here, is the fact that we created trillions upon trillions upon trillions of home value. I think the numbers state that 65% of Americans in some shape, way, or form own equity in a home or a real estate home. And so, you've added trillions upon trillions upon trillions of dollars in your home value. I think that has allowed purchases or buying or confidence to last longer because of this perceived wealth that's in everyone's homes. Not to mention, prior to this year, before this year, the stock market had been going straight up, and so everyone's 401ks, that own stocks. The tech stocks are going. Now, of course, it's been not a good year for stocks this year. It's been actually pretty bad. But So I think what's going to happen is now we've chopped a lot of stock value away, and that's starting to hurt the consumer confidence. Starting to see the numbers really fall off, and now we're starting to see the mortgage buyer. There's different buyers in real estate. You have those who are actually buying a home with a mortgage, and then you have the investor that's buying a home on speculation with borrowed money, and then you have the investor who's buying homes for cash. We have all kinds of different buyers, but the mortgage buyer, the biggest buyer in the market, that says, I'm going to go buy a home, I'm going to take a mortgage, I'm going to pay this price because I have confidence in the future. That demand is falling way off over the last month and a half. I mean, like substantially off. So we're losing the mortgage buyer. He's backing away. He's balking at paying current prices, and he's looking at his interest rate. He's looking at what his monthly payments are going to be from what they were going to be, and what the cost of homes are. And he's saying, I'm not really sure what's going on. I'm really worried about my job or whatever. So you start seeing the price of homes start to roll over, as we're starting to see in certain regions now, that we're starting to see the early signs of it. And people start seeing that their equity in their homes are falling while their stock equity is falling. They're going to put the brakes on really, really fast on some of the spending that they've been doing. And I think that leads to a pretty hard landing. And if the Fed is intent on, they're talking about raising rates by 50 basis points here at the next meeting, and they're going to, just do everything they can to just, gun these interest rates higher on the short end. Hard for me not to see, let's put it to me, the best case scenario would be an incredibly strong slowdown from what we've been. And so, I think you have to anticipate in anything that you're looking at, whether it's in the corn demand, whether it's in the oil demand, whether it's in farm equipment demand, you have to be thinking about, what's my demand going to look like 6 to 9 months from now if we're talking about being in or almost in a recession here in the U.S., not to mention what's going on globally. Mm-hmm. So you got to be careful. This is not a time to be, thinking, it's party time, good times ahead. It's been a lot of alcohol that's been being drunk. There's been a lot of fun, but when you come off the party high, there can be some very severe hangovers, and I think that's set up for later this year.
Yeah. So. I've talked about that a lot on this podcast that I do with Aaron Fennell. I mean, the premium that we see out there, same deal. I mean, it's just run up in prices, all stemming from, the availability issues, those different things. We see all these driving factors behind there. And then when all that stuff's gone, there's going to be a large premium that gets chopped off the top pretty quick. And it's going to look like the market crashed, but it just went back to where it should have been to start with, the normal marketplace. And I think that's kind of what you're talking about a little bit.
Well, it's interesting because the big revulsion over these rent increases, and don't get me wrong, I get it. You go up 20 or 30% in a year is ridiculous, mm-hmm. But it's interesting. That's from the pandemic low, right? I mean, right. You have to remember, rents crashed, and so if you actually normalize the rents from 2019 before the virus hit, and you just use that 3 to 4% increase, which has been pretty much what rents have increased over the longer term. So, we're pretty much right on the trend line.
Right.
Meaning we crashed and now we're surging. So but when you actually do the trend line, we're actually right where we should be. It's just that we never should have had the fall, as you said. And then, right. There's a lot of distortion going on. And same thing with the inflation numbers. Don't get me wrong. I get it. Okay. Mm-hmm. Everyone, I see prices going up, but remember, we had everything crash. So when you're coming off this crash and everything, all these prices fell, and then they come off the lows, it looks unbelievable because you came off from this low point. But when you really normalize it, don't get me wrong, it's elevated. I'm not saying it's not elevated. It is elevated, but it's not elevated to the extent that the sensationalism out there and many of the reporting is trying to indicate that if we just maintain what we've been doing, these inflation numbers are going to drop in half over the next year, just because we're going to be comparing more apples to apples than apples to pears, like we were doing at the trough of the. So you got to be very careful about statistics, where your starting point is versus where your ending point is. You can make numbers do a whole lot of things, but it's really the longer term trend lines that you have to be looking at. And so I think a lot of some of the excessive excitement in some markets over inflation, which arguably justified to some extent, it's been a little bit overblown, in my opinion. Overblown.
Yeah. There's a correction coming, and there always is, right? So just be ready for it and pay attention to those trend lines that you see. Shawn, good stuff as usual. Folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. All kinds of information on there to show everyone what we do, to see if we could be of value.
Right on, man. I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com for everything Moving Iron related. You can find all the information for the Moving Iron Summit coming up here in Nashville, Tennessee, September 6th, 7th, and 8th at the Hilton downtown. Shawn's going to be there. He'll give a talk about what's going on from the transition between La Nina to El Nino and some other factors that are playing in there. So that'll be a good speech as usual. So, Shawn, I appreciate you being on the podcast, man.
Thanks, you, Casey. Really look forward to it. And hopefully we can find a good connection here on Thursday. So
I hope so. All right. So with that, I'm Casey Seymour, Shawn Hackett. Let's go inspire folks. Out. Axon Tire is going to have more tips, tricks, and client advice throughout the year and in September at the Moving Iron Summit in Nashville. If you're looking to sign up for the event, please head over to MovingIronLLC.com. We hope to see you there. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransitinc.com for all of your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment from a dealer, auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.